Hey everybody, and welcome to Pickle Financial. I'm Gherkinit, your host, and this is going to be our first ever video here on this channel. For the 200 some odd people that have already subscribed, without me providing any content, I want to say thank you so much. And also to the people on Reddit who have supported me these last few days as I tried to fill in for Warden Shoes. Your support has really meant everything to me and also given me the confidence to come forward and start doing this live stream so I would have a more real-time basis to interact with the GameStop and Super Stonk community and Wall Street Bets. And I really can't express how appreciative of it I am. You guys have all been so kind and positive in your comments and concerns. So what I would like to accomplish in this video is I'd like to do a brief introduction about myself, and then I'd like to do a video due diligence for maybe the people that are missing out on some of the information on Supersong or, just don't have time to read it. So first things first about me, this is really my first time seriously attempting streaming. I've tried it with games before. I never really got any viewers. It wasn't very interesting. I wasn't even super good at the game that I was trying to stream. But this is something I am good at. And I have been day trading for 5 years now, 3 years with a paper account, which means no capital. It's just a way to test your strategies. And 2 years now with my own capital, and I make a living. Um, I trade options, stocks, and crypto primarily. I have traded Forex and futures. I don't like them. They're way too volatile and the risk is too high for me. So I kind of avoid those. But if you have questions on them, I'll try to answer in the best of my ability. Um, I am a finance major. I'm currently pursuing my master's degree in finance. My school has not reopened since the pandemic. I believe we're beginning classes in the spring semester. So until then, I got a lot of free time on my hands. And with Warden leaving, I really felt like I could come in and kind of pick up where he left off and fill in that gap for the community that wanted, solid, non-biased, kind of a logical approach to this whole thing. As I feel that that approach has the most merit in that, yeah, the stock could be worth 10 million, but what if it's not? And I think there's a lot of questions there that need answered, and I guess I'm hoping to be the one that does it for you. And so that's a bit about me. If you guys have any more questions, feel free to message me on Reddit. The link's down below. And you can also hit me up on YouTube down in the comments section. And so let's get into the video due diligence. Now, due diligence for the people who are from YouTube or Twitter, or, you just stumbled across this video, is essentially the root cause of this entire meme stock movement you're hearing about in the news. It is an investor's thesis on what they see in a stock and, its possible value or undervalue in the market, how they predict it will move, and, the positions or maybe positions they intend to take in it in order to inform other investors about the goings on. There's thousands and thousands of stocks, and it would be very hard to peruse each of them individually. And this kind of gave the community an insight into a stock without having to do too much of their own research. And so for the last few days, I've been providing due diligence, and I understand that not everybody has time to take out of their schedule to read through these. Sometimes they can be quite long, and even though informative, it's time consuming. And so what I'm doing here is hoping to provide a service for those of you that just don't have the time to read it. And maybe you have time to watch or listen to a 5-minute video. So here we go. So my due diligence, I'm covering the week of 4/6 to 4/30, which is this coming trading week. I will be streaming this entire week live starting at 9 a.m. every day. You guys are welcome to tune in or try to catch it after the markets, however you prefer. I will be here. So the first thing I want to cover is options. Now the options chain, we're looking at a low implied volatility, lower than we've been since late February, early March, and this is good. Warden also thought this was good. I agree. I agree with most things on his take of GME. But basically, this sets up the bulls for a run. They want to play leveraged positions. Leverage positions are cheaper right now. It's better to buy more for less than less for more. So the lower IV drops, the more bullish leveraged positions can be. And right here, you can see we're trailing off on the leveraged positions. And so I think our implied volatility is 153% lower than it was just 1 month ago. So that's fantastic. The next thing I'm going to go over is this descending wedge that Warden was drawing on his stream a lot. And I know a lot of his followers really buy into the importance of this. I'm going to be the first one to say that technical indicators are never 100% accurate. They just give you an idea. The more you have of them, the more accurate you probably are in your prediction. But remember that it's always a prediction. So Warden had this descending wedge, which is what it's called. He called it the Pokeball. And that's just because this right here, this little breakout point of the wedge, he drew a circle around and everyone was like, oh my God, it's a Pokeball. And that's what it's called now. So basically what's happening is you have a descending channel of consolidating price leading to a breakout here. And previously in my daily charting, I had said that I wasn't going to move it, and I'm kind of mad that I did, but I did not have it in the same proportion that Warden did. I had it in my own, and my own was actually a little off. So I've attempted to correct it to the best of my ability, and I believe this one is accurate. But this is where it lies on the 4-hour chart. You can see we're here. So we've dipped to the bottom of it, and we're getting ready for a breakout, essentially. Which is there. I've drawn with some crayons on a lot of these charts. I hope you enjoy that. And now I want to say one other thing, because everyone jumps in with this. You can't use technical analysis on manipulated stocks, and that's false. GameStop might be the most predictable stock that I have ever analyzed in the 5 years that I've been doing this and in my time in school. It drops every morning, it goes up every afternoon, and then it peters off into the end of the day, and that's been happening for a month. I mean, it's a day trader's wet dream, and it's definitely possible to analyze a stock with technical analysis as long as you can take that manipulation into account. So this is what I predict for the breakout, is that we will break out, in fact, but there will be short pressure on that breakout. They will attempt to contain that breakout to a price range to prevent us from just shooting through the roof. If the stories are true and 100% of the float is owned and everything shorting this stock is synthetic, the margin call will be very hard to prevent. And so, yes, if you account for manipulation, you can see that, you know, the breakout is still going to happen, whether it's manipulated or not. Now, I also wanted to go over some of the technical indicators that I myself came up with. The first one, which I think is a little more accurate than Warden's previous technical indicator, is a Bull Pennant. I've been seeing it form here since the 8th of March, and it's almost a perfect Bull Pennant, besides this massive short attack we had back on the was that the 25th, I believe. It's kind of irrelevant, but the reason I think this is more accurate than the descending wedge is that the descending wedge predicts a price floor of $40 for GameStop. And for the people that bought GameStop at 40, and for the people that made money off GameStop at 40, I'm very happy for you, but I don't think the stock will ever be that price again. I think the days of $40 GameStop are over. And so I I believe that the floor of the stock is between its average trading price of $127 and $138, and I veer more towards the 138, and that's where my resistance line is here at the 138.36 mark. And Bull Pennants have a higher rate of being correct than descending wedges do, and I find it interesting that both patterns are formed on this chart. And again, this indicator also predicts a breakout to the upside, and with the amount of consolidation we've been doing, quite a large breakout. The next one I want to go over that I mean, I'm sure everyone's seen it or heard about it at this point, but I want to go a little more in depth on it, is the cup and handle on GME. And cup and handles commonly are mistaken for a short-term technical indicator, and they're not. They're a very long-term technical indicator. They usually form over 3 to 6 month periods. And if you look here, this is our squeeze in January at the top of the cup. And it's almost a perfect pattern besides this run up here. And then there's our handle. And that would be the breakout point. You know, the handle could extend out a little further, but it is a cup and handle. Now, these have a 20 to 30% chance to correct to the upside. So they usually correct, which would be around the $350 mark. Now, to correct to the upside, 20-30% chance to correct 1.5 to 2 times that amount. So you're talking $575 to $700, $525 to $700 with the surge and predicted price target. I think anything over 500 to 550 is going to cause a margin call on the shorts on this stock. I think that's why Robinhood cut trading in January, and I'm pretty sure that they'll try something this time as well, whatever they can do, right, to save their position. That's the name of the game. Now, let's go to the next indicator. I have 4 of these that's showing a breakout incoming. The MACD, which is probably the most common indicator you'll read about or research or see people use. And the MACD is pointing at a crossover point. We are oversold. We've been oversold for a long period of time, from the 20th till now. The 20th of March till now, we have been in the oversold range, and a crossover would put us on the upside. And lastly, the TTM Squeeze Indicator right here. As you can see, we are in this consolidation zone, and TTM Squeeze is a indicator of volatility and momentum, right? And so you get these indicators that build up. These little dots right here are signifying them, and those are periods of consolidation, and then the stock will break out one direction or the other after that consolidation period, usually 4 to 6 periods of consolidation before a breakout occurs to the opposite side. As you can see, we're oversold, so we need a breakout to overbought. This actually triggered on the January squeeze and on the February 24th run up. So I'm watching this indicator pretty closely. Lastly, something I just picked up when I was doing this analysis was I started looking at our negative volume. And I was curious, how much negative volume does it take to bring this stock down? Because I noticed on our downs, a lot more volume was being used than on our uptrends. And I actually only picked this up because of the live charting I've been doing for the last few days. But I looked back at it, and from 310 to 325, that initial climb to 350 and the drop-off, I'm measuring the drop-off, not the climb, but from that drop-off point till the 25th, there was 307.4 million shares of negative volume with an effective price drop of $231.6. So from a high of 348.50 to a low of 116.90, 307.4 million shares were traded total, but to a negative effect. And I figured that that is negative $1.32 per unit traded. And then here from 326 to 413, we're at negative, out of 80.7 million, we're at negative $1.07 per million. And here from 414 to 423, which was Friday, we have an effective price drop of negative 1553 with a effect of 0.72 cents per million unit negative units traded. And so what I figure is happening is that the stock has actually become so shorted that the shorts themselves are taking on an inflationary value. So the more shorts they print, the less valuable the short shares are moving forward. It's the same as the inflation on the dollar. I actually have another super like crazy speculative DD that I wrote kind of in the middle of a late night fever dream. But you don't have to read into that if you don't want to. But basically what I think is happening is they've effectively shorted the stock so much that the shorts aren't really worth as much anymore. I don't even know if given unlimited shorts at this point, they could bring the price to zero. It may not even be possible without a significant number of shorts being covered. And so that's it. That's what I wanted to cover. And that's what I'm going to be looking at this coming week in our live stream beginning tomorrow at 9 a.m. If you guys want to support this channel, I'd like to buy some more market data software just to keep everybody abreast of the information. And that's primarily what I'd be using any donations for. Also, maybe some better video and audio recording equipment, because frankly, I think this looks awful. But maybe a little, because I can't really day trade while I do this, and it affects my income, but I don't mind doing it. I'm here to help the community in any way I can. And thank you all so much again for your support. If you do want to support, there's a coffee link down below. That'd be amazing. If not, that's fine. Totally cool. If you could, though, drop a like, subscribe, make sure you don't miss any of my content coming out over the next weeks. And thank you so much for watching this, and I'll see you soon. I don't know how to turn this off. So, oh, there we go.